Hi there, I'm Champion Trader Kevin Davey, and today I'm going to talk about why simple algos are best. So let's get started. We're going to talk about why simple algos are the best. And the reason I think simple algos are the best are because when you start getting complicated with your algos, you start to experience this where you build a nice looking backtest. And the more parameters you add, the more optimization you add, probably the straighter the curve. And that's what you end up during development with. But when you go live, maybe your strategy does something like this, where it just seems to fall apart and lose money, or maybe break even. That's a lot of times a symptom of having algos that are too complicated or that just are not based on simplicity. But you don't have to feel bad about this. Having strategies like this, everybody's had them, even good traders. I certainly have had some of these over the years where they just look great and then they just fall apart. And a lot of times I've found that the more complicated the strategy, the more it falls apart. So don't feel bad. Now, I'm going to give you a couple tips, and the source for these tips comes from my Strategy Factory Club. This is part of my Strategy Factory course. Students of my course create strategies, they submit them to me, and then I watch them in real time for 6 months. And then, if it passes some performance criteria after 6 months, they get a bunch of strategies in return. So it's a great way for students to get a lot of different strategies that are all proven to work. As part of this club, I obviously have a lot of statistics. I have over 1,500 strategies that people have submitted. And so I've been able to analyze the data and come up with some things of, hey, this works, hey, this doesn't work. So that's going to be one of the sources of data that I'm going to show you here. But the key with all this is what I call take it easy. Most algo traders think they have to reinvent the wheel and they have to make something super complicated, and they try doing things the hard way. There's the easy way and there's the hard way. Well, always try to go the easy way. Go to the right there. Don't go to the left. That's the hard way, and that's what you want to avoid. So let me show you what's hard in algo trading, because if you know what's hard, you'll know what to avoid. One thing that's really hard is developing strategies for markets that have high slippage. A lot of people like these markets, but it doesn't work. And people like developing scalping strategies. That's also really hard in algo trading unless you're a high frequency firm. And then finally, developing complicated strategies. That's the other part of it. So let's take a look at all those and talk about why they're hard and how to get around it. Okay, slippage. A lot of people like markets like lumber, orange juice, milk, palladium. Those all have a lot of slippage. And what that means is if you're going to build an algo for those, your algo has to first overcome that slippage to even have a chance at profitability. What are we talking about? Well, lumber, just as an example. I've estimated based on my own trading and data analysis that it's about $240 per round turn trade in slippage. That means if you were to buy and then immediately sell, you'd probably be out $240 plus commissions. It's not a very liquid market. Yeah, it's had some great trends over the years, and that's what a lot of people fixate on because it looks like, hey, I just follow that trend, I can make a lot of money. That's possible, but realize there's a lot of slippage. And the more slippage you have, the tougher it's going to be to come up with an algo that makes money over the long run. And I could go through that for orange juice and palladium and other markets too, but that just gives you a sense of what's going on. High slippage is a lot tougher. What my students have found is if they stick to a lot of the markets with a low slippage, they tend to do a lot better. And what are those markets? Well, some of the stock indices are fairly low. ES, the mini Dow, YM, RTY not as much, but its slippage isn't ridiculously high. Some of the currencies, they have pretty low slippage. And then some ags, soybean oil, Kansas City, hard red, winter wheat. Students who take my class have a lot more success in those markets than they do in some of the higher slippage ones. So there's a definite correlation with low slippage and ease of building strategies. Those are good markets. Now, let's talk about scalping strategies. So what I have here is the x-axis is the bar size in minutes. So you have 1 minute bars over here. You have 1440 minute, which are basically daily bars over here. And what it shows over a whole bunch of strategies, and I did this in my Algo Trading cheat code book, the average net profit is really negative for 1 minute, 2 minute, 5 minute strategies. So the low time frames are really hard because you've got to overcome that slippage, especially if you're trading a lot, where you can see, it's hard to see here, but it actually goes positive as you go out to the bigger numbers. So what it's saying, if you want ease in building algos, look to daily bars, look to 720 minute bars, look to the longer term bars and stay away from the shorter term ones. The scalping strategies usually lead to bigger overall losses. And a lot of people don't realize that. They think, well, hey, I'll only risk a tick or two, and therefore I'm better off. Well, you risk a tick or two again and again and again, and you keep losing, you're going to be in trouble. A lot of times it's better to go with the bigger bar sizes. And it's easier to develop algos, and they tend to be more profitable. So that's the second part about being easy with these algos. And the third part is the complexity of the strategies. And again, this data comes from students of mine, and this is out of sample performance. So I broke them up into 4 different categories: very simple strategies, complicated strategies, and very complicated. And then I have a pass rate here in percentages. And so what you can see are the simple strategies. Those tend to do the best. If it's too simple, if it's just maybe buy and hold, that would be very simple. Those tend not to do too well. But then on the other side, if you start getting very complicated strategies with 10, 20 rules, with a lot of parameters to optimize, those tend not to do well either. The sweet spot is right in the middle with what I call simple strategies. You have a few rules, maybe a few variables you optimize, but you don't do too much. That is the problem with developing complicated strategies. It just gets out of control pretty quickly. So if you're going to build strategies, take the easy way. Go for low slippage markets. Go for longer term bars, like daily bars, and go for simple strategies. Those are all proven by my students to lead to more success. If you have a comment, you have a concern, you want to voice your opinion, hey, I'd love to hear from you. Just leave the comment below. I'm Champion Trader Kevin Davey. Have a great day.